welcome to today's lesson. This being our third week. So I want you to take the attendance, sign against your name. What's the date today? The 24th of October 2020. 2025. So I want us to remind ourselves, what did we learn the previous class on demand? Yes, Faith?
We learned that demand is the quantity of goods and service continuously and able to buy at a particular price at a given time.
Yeah, definition of demand, the quantity of goods and service a consumer is willing to buy at a particular price. Any other thing we learned in the previous class? Yes, factors affecting demand. One, price. What else? Yes. Better? The income of the consumer. So that's very good. So today I want us to look at another topic on the national income. So our today's learning objectives. One, we shall be able to define what national income is. Two, we shall look at the concepts related to national income. The concepts related to national income. Okay. In our day-to-day lifestyle, I know that you have heard what income is. So today we shall add the word national. What do we mean when we say a nation, or from the word nation? Yes, wait.
A particular government.
Yes, a particular government. For example, Kenya is a nation. So we shall add the word income. So we shall be looking at the income that is earned by our country, for example. Okay, from that now, brief summary. Who can now give us a full definition of the word national income? Yes, Maureen?
It is a measurement of the total monetary sale of the flow of final goods and services.
Total monetary. We have the flow
Of final goods and services.
Then there's also something else. We say
Arising from the productivity
exactly productive
activities
activities
of a nation
of a nation.
in one
So we say in a specific period of time. Specific period of time. So when we talk about the national income, we talk about the total monetary flow, from the word money, monetary flow of all goods and services which are produced from the productive activities in a specific period of time. And usually the national income is measured annually. We all understand what we mean by annually. That is at the end of every 1 year. So the productive activities here include all the activities, for example, from the industry, from the various industries. For example, we may have the tea industries. Which other industries do we know? Coffee, direction, yes, also. So when we combine the production of all those industries, we get what is called the national income. Are we together? Yes. The national income. Now we're going to look at what are the concepts related to national income. What do we mean, or what do we understand by the term concepts? Number one concept,
gross domestic product.
the gross domestic product. Yes. The cross national product.
Next national product.
We have the net national product. So these are some of the concepts when we talk about national income. And then we talk about all this: the cross domestic, the cross national, the net national product. We talk about the national income. So by the term gross domestic product, let me write. So give a child what this means. When we say that a nation, or we have measured a national income using the gross domestic product, what have we looked at? Class, any idea?
It is the total monetary value of all final goods and services produced within the geographical boundaries of the funds.
We talk about the geographical boundaries. Total monetary, these are the total monetary value. All the income that is earned within a certain geographic point or boundary is known as the gross domestic product. For example, let's take the example of Kenya. We have said we have so many productive activities. So whatever is earned from these productive activities, we measure them in terms of the gross domestic products. Are we together? Yes. And then to add on that, why do we say gross? Why not just the domestic product? Because we have said all these are produced within the geographic boundary of a nation. Why do we use the term? We use the term gross. Total. Yes, total means that there is no deduction. So we say the word gross implies that no deduction of the value of the expenditure. That is the gross domestic product. What about the gross national product? Now the difference comes here. This was the domestic and this is the national, gross national product. What does this imply from the word national? We'll give a try because we have said in the domestic we measure or we keep all the values within the geographic boundary. What about when it comes to the national? Yes, right?
It is the total value of the final goods produced within the country or outside the country.
Exactly.
By citizens.
Exactly. We say produced within plus those which are produced outside the country. For example, the country Kenya. In here Kenya, we have so many foreigners. So those foreigners, they invest. Whatever they invest, and then they are added to what the Kenyans do to what the Kenyans invest. So we get the gross national product. We say those are which are produced from outside and within the country. Now, to calculate now the gross national product, we say it's the gross domestic product plus, now whatever is produced outside the country, we term it as the national factor income from abroad. NFRA means that it is the national factor income from Do we get the concept? Yes, the national factor income from abroad. So we say to get the gross national product is the gross domestic product plus the national net factor income from abroad. Now another concept is the net. This is the net national product. Net national product. So the difference comes here. We were talking about gross. Now we are talking about net. there is no deduction. But the net here, now the concept of deducting comes in. So we say the net national product is the same as the G and B, that is the gross national product, minus the depreciations. So the concept of deducting, we say with the actual income available for consumption and investment, then the depreciation recognizes the reduction in asset value, which generally assessed from wear and tear. So this depreciation is as a result of the wear and tear of the products. Are we together? Yes. Any other concept which you have not mentioned? Class, any other concept? So for a better understanding, I have a question here, a calculation. So we are told that the income earned by residents from abroad is $50 billion. That is the income earned by residents from abroad is $50 billion. And then the income earned by foreigners in the domestic country is $30 billion. Now we are told calculate the gross national product. Calculate the gross national product. And then we are given our GDP to be $500 billion. GDP is 500 billion. The income from abroad is 50 billion. The income earned by foreigners in the domestic country is 1 billion. And then the GDP is 500. So how do we get our gross national product? What was the formula of getting the gross national product? It was the GDP. So from here, we have first to calculate what is our net factor income from abroad. So we say the formula of G and B is GDP plus net factor income from abroad. So from our case here, first calculate what is your net factor income from abroad. So we say is the factor income earned from abroad minus the factor income earned within, which gives us how many dollars? 20. Okay, from now, after now finding 20, we say G and B is the same as the GDP of 500 plus the net factor income from abroad. So what is the answer here? 520. So the G and B of this particular country is $520 billion. Understood? Yes. Any question in class? So that marks the end of our lesson for today. But before we end the lesson, there's an assignment for you. The assignment is the measuring standards of living is one of the uses of national give the limitations of now using the national income. Give the limitations of using national income to measure the standards of living. You explain. Let's give you explain the limitations of using national income to measure the standards of living. We shall meet on the next class, and this assignment will be submitted before that date.